Welcome, dear traders. Federal Reserve Governor Christopher Waller called the June CPI report a major leak disappointment. He also backed rising rates by 75 basis points or more after a hot inflation report. He added that the markets may have gotten ahead of themselves a little bit when they just assumed the key rate would go to 100 points. Let's discuss what happened in markets in our review of the Asian session. Christopher Waller believes that high inflation figures did not come as a surprise to analysts. It would be unwise to expect a decline against the backdrop of rising energy prices. Waller provided some positive comments as well. He said the strong labor market data made him fairly confident that the US economy did not enter recession. Besides, a recession, which is inconceivable currently, with the unemployment rate at 3.6%, can be avoided. Waller also noted that further rate decisions will largely depend on data on the retail sales and the housing market, which are on tap before the FOMC meeting. If the figures turned out to be significantly higher than expected, it may force the Fed to hike rates more aggressively. Financial giants JPMorgan and Morgan Stanley have already forecasted that the US economy is slowing down. Both US banks reported a drop in second quarter profits yesterday and warned of a growing uncertainty in the market. The US dollar maintains its bullish run thanks to aggressive monetary tightening. However, recession fears and even signs of its start are pushing the greenback closer to the support level. After Christopher Waller and other Fed officials spoke in favor of a 75 basis point rate hike, the sell-off in the stock market subsided. It affected the trajectory of the US currency. In today's Asian session, the US dollar index weakened to 108.61 against its rival. It was consolidating in the range of 108.44 and 108.71. However, the upward momentum is still strong. To start with, the greenback benefits from the prospects of higher rates compared to other central banks, including the ECB. Secondly, in times of geopolitical uncertainty and the energy shortages in Europe and some parts of Asia, investors prefer the US dollar to other safe haven assets. Today, the yen managed to assert strength against the US dollar. Weakened by the Bank of Japan's ultra-loose monetary policy, the yen was able to advance amid a decline in the 10-year US government bond yields. After reaching yesterday's multi-year high above 139, the dollar-yen pair was trading at 138.77 in the Asian session. However, analysts believe that the US dollar largely impacts the trajectory of the pair. The relative strength index exceeded 70 points, which means the pair is getting overbought. As a reminder, this is the sixth time in a year, so the next possible target levels will be located near 140.30 and 141.70. Today, it's moving in the range of 138.53 and 139.13. At the same time, economists reckon that the widening rate gap between the Bank of Japan and the Fed may keep the dollar-yen pair at the high levels until the end of the year. The question is whether the Japanese economy will resist this pressure. Japanese retailers are generating a huge profit amid a rapid decline in the yen. For example, Japan's East Retailing, the owner of a clothing brand Uniqlo, posted a record quarterly profit thanks to strong sales in the United States. Yet the weak yen increases import prices, reduces profit margins, and adversely affects consumer spending. Today's macro stats have unveiled that traders are avoiding the weak yen. According to the IG Client Sentiment Report, only about 25% of investors currently have net long positions on USD JPY. The ratio of short positions to long ones is 2.98 to 1. The Australian dollar is also losing momentum. The AUD-USD pair has remained almost unchanged over the past 24 hours. Commodity prices are declining, which is bearish for the Aussie. Besides, the risk of sentiment prevails. The Aussie may flex muscles if China removes the ban on the imports of Australian coal. If the 2-year ban is lifted by the Chinese authorities, it will be extremely positive news for Australia. So far, this is just hopes. In the Asian session, the Aussie was hovering at 0.6738. It was trading in the downward channel between the resistance level of 0.6766 and the support level of 0.6719. Subscribe to our channel and watch our video reviews to keep close tabs on market developments. See you soon!